Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. It's August 4th. We got the big day today, the jobs numbers. So let's jump right into it. And we got the non-farm payrolls for the month of July. So last month in June, we had 231,000 new jobs created. Forecast for July was 175, and it came in a whopping at 209,000 new jobs here. So great overall numbers here. June was and May were actually revised slightly up about another 2,000, so not a huge increase or revision, but it still gives us strong job numbers here. And again, we're still within range, but again, above the range we were looking at. We also got unemployment rate today. Last reporting came in at 4.4%. Forecast was supposed to be 4.3, and it came right in expectations at 4.3%. Still, again, job numbers are still looking. The one we're kind of really looking at, especially the Fed, is average hourly earnings for the month of July. So back in June, we had 2.2% increase in our average hourly earnings, and that was a year over year in June at 2.4%. So the forecast was supposed to be for another increase of 0.3%, and it came in line at 0.3%. Now, that brought us up to 2.5%, so year over year average hourly earnings. So still kind of low. This is what's keeping inflation relatively down. And what's helping out mortgage-backed securities or bonds and keeping those low as well. So let's take a look here at the headline news. Stock market's currently up. They like the data that came out. There's a few earnings reports, but again, it's looking more at the data, and the job numbers is what's kind of heating up. So overall, good day in the stock market here. The bond market here, we're down, so all the gains we had in yesterday, as I mentioned, you may want to kind of start locking in ahead of this because we've been getting some pretty good data on jobs numbers. We pretty much lost the gains we gained yesterday. The good news is we're still above the this floor of support now. The 50-day moving average becomes a floor of support. It's going to help provide, and we're still a ways off of that. So currently we're down about 22 basis points from where we left off yesterday, which of course gives us higher interest rates today. So that brings us a worsening pricing here today. So heading into the weekend here, we're going to be going into next month will be the Fed meeting. Most likely you probably won't see in terms of a rate hike at that point, but you may get some indications when they might do it. And if they do it, maybe closer towards end of the year when they do that at their December meeting. The September meeting, of course, will probably be more about the trade balance. They're not trade balance, but they're more their balance sheets of them disposing that or start selling off on their balance sheets or reducing it. So let's go ahead and so that pretty much concludes it for the day. But if you guys want more updates, just come over to Twitter. Find me at Mike Bjork. I do post more updates on there. If you guys are in the market for a mortgage, whether it's refinance or purchase, we can help you out with that as well. Just contact me via email. You guys have a great weekend. We'll look forward to see you guys on Monday. Thanks so much for watching. Bye-bye.